My name is Nick B, and let's get into this week's futures overview. Starting with the Forex economic calendar. Monday, we don't have any news. Tuesday, we have core PPI at 8:30 a.m. Wednesday, we have core CPI. Thursday, core retail sales and unemployment claims. Let's see, we also have Empire State Manufacturing. We have building permits on Friday, and Friday ends off with just the consumer sentiment along with the inflation expectations. Now, part of me feels as though this inflation data moving forward will not matter into the market. Not that the market is going to totally dismiss it, but it's not. We're not going to revolve around that too much. I think all the pressure is on the labor market right now. And as always, let's jump in. Let's start with NQ on this one. So last week I did say it was pretty much the bottom call. And what's interesting is the daily candle here on NQ, if I'm not mistaken, this is a spinning top. And I don't talk about candlestick patterns too much, but most times you give it about a day or two to develop to confirm what it's going to do because a spinning top usually means there's uncertainty in direction, be it up or down. So depending on where that next daily candle is going to be close or where how what direction it takes on, that's going to tell us where we're going to head. So, no executions for us into Sunday. I'll most likely be waiting on Monday and we'll go from there. If this candle turns red and it's a bearish engulfing or the daily candle closes red, I'm going to give you a heads up. There may be more downside. This may have been a fluke and we may be coming back down towards supports. Personally, I think that's unlikely, but we'll see what we get. With that said, also, if I pull up NQ on the weekly, it's very beautiful. You had a beautiful bounce off of the 50-day EMA. We never breached it, and the most important thing for me was, were we going to get below 17,100? And we couldn't. This is a crazy retracement. I mean, that we gave back 1,300 points to the upside from the bottom or so. That's bigly. What I'd like to focus on into this week is if we can get above really 19,000. 19,000 is that key level. 18,900 is going to be the prerequisite for the weekly. My 20 EMA is at 18,876. So that confirms that at 18,900, that's going to be the start, but 19,000 will seal the deal for us in this being the bottom call and continuing higher. With that said, let's break this down now to the daily and identify what would be some realistic targets to back up to the upside. So first things first, we filled a very important gap over here at 18,500. It took us a few tries, but we finally solidified it. Wonderful. And now we're seeing a push here out the open. Very wonderful. I do stand by the bottom call and I do think we'll have room for recovery, but let's look at the confirmation factors of it. According to Dow theory, the higher highs, higher lows, what I use for guidance and trend, we see a lower low, lower high, lower low, lower high, lower low, lower high. And for me, to confirm a trend reversal in such a case, I need a break of the second lower high. Now, that's going to be at 20,100. Once, if and when 20,100 breaks on NQ, it's over. We're going back up to the highs indefinitely. Now, again, I'm not going to leave, per se 2,000 points on the table just like that. We're going to break it down a little bit more. But the first thing I'd want to focus on NQ is, can we hold and get above April's, or is this March's highs of 18,700? If and when we can get above 18,700, solidify it as support, wonderful. We now have the green light to go towards 19,000, but really I'm going to be eyeing above 19,000. I'm going to be eyeing 19,730. That's going to be the first leg that if and when we get above this level, we have a gap to fill here as well at 19,880 towards 19,900. It's very minuscule, but it's still going to happen. With that said, let's break this down now to the smaller time frame because we want to get an idea of what's happening here in this range. We're still not out of the woodworks. And let me go ahead and bring this down to the 4 hour now. So you could see here This was our low. I found it very odd that we try to go for the low two times. The second time we came about 11 points from that bottom and we couldn't do it. Retraced all the way back up. We had a little bit of sideways action, especially into Friday's close. It was a little bit sideways before we finally got that push higher. And now we can see on the 4 hour, the MAs are starting to turn. We're above our 20-day, we're above the 50-day. Now we have to get above the 100 and 200. But again, how feasible is that? And for me, the psychological level, or at least what could confirm and ease traders' confidence in terms of going higher, is can we get above the March all-time highs? If we can, wonderful. Let's form that as support. And then we have a clear shot up to 19,700. Here's the only discrepancy because we are on the daily, on the 4 hour, and the 1 hour. When price action is in between my moving averages, most times it signals for uncertainty. Most times it turns into really wide chop ranges. So I'm not going to be, guns blazing right into the week where we're going long. We're going to take it slow, take it nice and easy, but we have our confirmations for upside. Get us above the highs. We can take a look at revisiting 19,700. And then above 19.7, we have this gap to fill towards 19.9, and ultimately above 20,001. That confirms that we're good. We're basically, not basically, but we are going to go higher. We're going to take stabs at the highs. Again, that doesn't answer the question, how can we navigate in between here? And that's going to lead me to my next time frame, which is the 1 hour. Let me take a look at that. So what are we doing here on the 1 hour? And you could see here slowly we formed the base of a higher high at 18,563, which was this gap fill, made a higher low at 17,735, wild higher low, only for us to bounce out of there. And on Friday, we retested 18,563 right before propping us back up. And now we're getting a bit of a push. Wonderful. On the 1 hour, also, this is key now because on the 4 hour, we were between the moving averages. But here we can see that the 20 is getting above the 50 and the 100. The 50 is getting above the 100-day. And now price is somewhat going to be battling with the 200-day EMA on the 1 hour. Wonderful. 18,600. That is our baseline support here for now. If and when price breaks below 18,600, that's really going to expose us back down to 18,400. If 18,400 decides to break, I mean, we have all this room to come back down to 18.2, 18,000, and really find a base around 17, 17.9. That would be my first guess. Okay, so what can we set up here? Because again, this is not, I don't want to say it's not a valid level, but if it happens into Sunday, I really don't want to rush the guns on executing it, but we just might have to go long above 18.7. And the stop it would have to be pretty wide because we're targeting not just 18,800 is going to be the next target. Then we have 18,900. We're basing it off of the lower highs that we've been making. Above 18.9, we have 19,000, the psychological level. And ultimately, what's going to put us over the top is going to be 1967. If and when we get above that, it's clear skies to 19,700. We'll capitalize on that. Now, we covered the downside and the upside of it. Again, very tricky territory, and it really, I'm only saying that because it goes back to on the daily, we need about another day or two to confirm what it is that price action wants to do. This is an uncertainty candle. I'm not saying that, yes, we're just going to get out of here right away. No, I have to be a little bit prudent because if this candle decides to go red, again, there may be more downside. Nonetheless, we'll be ready for both sides. With that said, also something neat I can do to help me get an idea on how to navigate out of here is we have a treasure map on price action now on where it wants to go. We have our lower highs, lower lows. I mean, everything is looking wonderful here. And this nifty tool is the Fibonacci retracement. Starting at 20,983, I'll stem it down to my lows over here at 17,351. Now, let me just fix this up a bit. 83.75. Let's set the color just so it stands out for me. Okay, very cool. I want you guys to take note of this Fibonacci retracement and where it mapped out our specific levels. Mind you that with the Fibonacci retracement, I only like to focus, well, that's not true, but my main levels that I like to go for are 38.2, 50, and 61.8. So everything that we just gone over with the naked price action, this indicator of the Fibonacci retracement confirms to us. The 38.2 percent starts at basically where our March all-time highs were, and that's the level I kind of plotted out here for us to go higher. Our 50% retracement starts at 19,167. If and when we get above 19,167, again, I think that's a clear shot, straight shot to 19,600, if not 19,700, which is this lower high here. That would be ideal. Now, again, as long as we're below 18, let's use 18,738, basically below March's all-time highs, there is still a possibility we can revisit 18,420. And then the fib is showing us that the baseline support, where if this decides to break we will see more downside, is going to be at 18,200. Okay, fair. So we have this all broken down, in terms of upside, downside. Um, Now it's just about a waiting game, and we'll talk a little bit about the VIX too, because that was a key player for us last week. Um, that's that with NQ. Let's go ahead and take a look at ES. Now I had the same thing going here. Let's go over it. So first things first, on the daily, again, looks like a spinning top, same thing, where there's uncertainty, where it's not, it's not the buyers and it's not the sellers in control here. It's they don't know what's going to happen, and I don't blame them, because this was a heck of a candle, especially the weekly candle, for us to recover from that bottom call. With that said, the first thing I'm going to do is I'm going to map out March's all-time high, right, when we had that big pullback, April really. So that was at 53.32, and we are well above it. In comparison, ES is leading the way compared to NQ. NQ is just slightly below its March, April highs, and ES is already holding above it. The other interesting thing on ES is on the daily, we were wedged between the 100-day and the 200-day EMA, showing signs of uncertainty, but here we are holding above the 100-day, which is 53.39, lines up with, again, March, April highs. Okay, so as long as ES holds above 53.30, let's round that number up, uh, we have our support to possibly continue heading up higher, and the next clear lower high to target for us is going to be, and this seems ambitious, but 5,600. 56, which is the second lower high, 56.30, the second lower high here. If and when we get above that, again, that confirms to us that's it. I mean, we're going higher. We're going for those highs. Again, I understand there's about 200 points of space, 300 points of space here. We're not going to leave that on the table, but it's key that I keep in mind what's going to confirm us getting out of here and what could possibly, take us back down to the downside. So with that said, let's take this on the weekly as well. I want to see what we're looking like on the weekly. Wow. So has a much more beautiful close on the weekly than NQ. We ended up closing above the 20-day weekly EMA. That's a big power player level for me. And that's at 53.49, which we're about what, 8 points above that level. Okay. Again, given the candle that's on the daily, keeping in mind this is still uncertainty, let's not rush into Sunday execution. Let's give it until Monday to brew up what it is traders are feeling. I'll give you a heads up also, Monday may be a little bit of uncertainty depending on what we do. We might be going sideways, the orders might be accumulating in a certain direction. That's something we'll confirm and determine by Monday's close. If that candle is green, wonderful, we are going higher. If that candle is red, oh no, but still, we'll have the opportunity to short down to the downside. With that said, let me break this down now to the 4 hour to take a closer look at what's going on here. And we can see we are above March, April highs as well. We had a beautiful retest. The 20-day is stemming up towards this level as a support. Wonderful. The assumption is if we can get above the wick of 5385. Nope, never mind. It's going to be 5400. And I brought this up last week. I didn't quite get the close I wanted to see last week, which was 19,000 NQ and 5400 ES. But if we can manage to do that into this week, that's going to seal the deal on whether this is the bottom or not. And again, I say this is the bottom. So 5400 is going to be that psychological resistance for me if and when we get above it. It seems like a straight shot up towards 5600, but I believe the best way to go about it, especially with ES, is in increments of 20. So if we can get above 5400, we'll be looking at 5420, 5440, 5460, 80, 5500. 5500 breaks, and so on. We move our way towards 5600. The 100-day and the 200-day EMA confirm those 20-point increment targets, right? The 100-day is at 54.20. Our 200-day is at 54.60. Wonderful. So we have the indicators to confirm where it is we're going to go depending on what breaks or what doesn't. So in terms of upside, again, it's going to be more psychological, but at least we have the treasure map that can take us higher. Let me just check something. We had a gap down right here, down to 55.80. Oh, we filled this gap. So ES filled its gap to the upside here. Now, I'm going to use the fib at the end. I just want to use, naked price action here to confirm what it is we're doing, what could we be doing, and then as always, we use the indicators to confirm what our not bias is, but what our analysis tells us. With that said, let's talk about the downside. If we break below March, April all-time highs of 55.30, I'd really be looking at 53.17 for possibly more downside. A break below 54.17, probably 54.10, and the psychological level of 5300 takes us all the way down to possibly seeing 5200 again. A break of 5180, oh no, we might see a little bit more downside. Again, that's not enough information here. That's kind of up in the air. So let me break this down to the 1 hour and take a closer look. Okay, so the 1 hour is very similar to what NQ is showing us. We have the 20 crossing over the 50, the 100, heading up towards the 200-day EMA. And if we can manage to stay and get above the 200-day EMA, we should be seeing more upside. It's perfect because the 1 hour also lays out a little bit of a template of what those lower highs to the upside may be, starting with 53.80. Get us above 53.80, 5400 comes in play, a break of 5400, we just identified a play to the upside. We would put our stop at 5480, 5400 we go long. Our first target is going to be 5420, then get us above 5420. How perfect is it that we're lining up? It's at 5435, but more or less the target is going to be 5440. That's decent. That's about a 3-to-1 risk to reward ratio on that setup long. Okay, get us above 54.40. Again, 54.60 is going to be the big player for me. That's the 200-day on the 4 hour. And then above 54.60, really, we're looking at 54.80, 5500, that psychological level. Now, if and when 5500 breaks, I mean, you kind of have a clear shot straight to 5600. Again, ES likes to move in 20-point increments, so we can assume that if that psychological level of 5500 breaks, we're just moving in in increments of 20 until we see a slowdown in price. Cool. So we have the upside and the downside mapped out now. And now my favorite thing to do. Let's pull this up now on, I guess the 4 hour is fitting. Yes, let's do the 4 hour. And let's draw our Fibonacci retracement to confirm it. So 57.21 down to 51.20. It was really 51.19. That's where we wicked. And then 57.21, 25. And now same thing. Let's change up the color just so I could see it a little better. Okay, wonderful. So what does this tell us now? Okay, so 53.49, which were those previous all-time highs. Oh, or hold on, let me just confirm something. On the daily, what is that level? 50, 53. 39. Oh, nope, never mind. I got it confused with the daily 100-day EMA. Fine. Okay, wonderful. So we have just entered the 38.2% retracement. It confirms what I was saying earlier about ES leading the way over NQ. We are above our March, April all-time highs. We are above now the 38.2% retracement, and that does give us room and possible confidence to continue heading up towards the 50%, which is at 54.20. How wonderful. Meaning, if and when we decide to go long at 5400, our next stop is really 54.20, just like what we went over. Wonderful. The fib is confirming what our price action analysis, our naked eye price action has basically laid out for us. Above 54.20, you now have room towards in increments of 20 points, 54.40, 54.60, 54.80, and how wonderful the 61.8% retracement more or less ends around the 5500 area. So if we get a break above 5500, judging by the fib, we can put our stop at even 54.90, 10 risk 10 points. And again, we're targeting this upside in increments of 20, 55.20, 55.40, 55.60, 80 until we get to how wonderful. 78.6 lines up to the lower high of 5600. So we have the base plan, the treasure map in terms of upside for ES here. Wonderful. And again, in terms of downside, just get me below the April March highs. Get me below them. Get me below 53, 50. I would really put 5300 is where I would go short, and I would put the stop at 53.20. You would have to risk that because below 5300, I mean, that's a 2-to-1 risk to reward ratio. You'd be risking 20 points to make 40 because your next feasible support, according to the fib, is going to be 52.60. Wonderful. The midpoint between this rise. Below 52.60, 52.40, 52.20, 5200, and it's over. The bottom is no longer in. With that said, we're coasting. Last but not least, let's go over the VIX. VIX was very wild. What did it do? Why did it do it? Well, the last time we experienced such volatility was back in March of 2019 when we had the COVID crash, where VIX spiked up as high as 85 to then cool off. So we're seeing a similar reaction here where we spiked up as high as 65 only for it to come way down. We had capitulation happen and we talked about it. Capitulation is just a fancy word for everyone basically saying fuck it and throwing the sink at the market where get me out by any means necessary. Those levels were 35 to 37. Seeing now that the VIX cooled off down to 20, our chill level, if we can manage to get back below 20 and kind of hang out below 20 down to the $15 area, wonderful. We should be back on track to seeing the dips get bought. Now, if into this week the VIX decides to act up, and if we decide to hold and bounce off of 2037, see a little bit more upside, yes, short term we might see some selling, but depending on where the VIX goes. So if the VIX uses 20 as a support, which is our max fear panic level selling, if we use that as support and come up towards 30 or 35, if we get back towards the capitulation levels, I don't see that happening. But if we do, that's just going to present another stock buying opportunity for smart money. On a side note, I think we're good. I think we're solid. Well, what I think doesn't matter. The market's going to do what it wants. But if the VIX can get below 20 and we can, again, range lower, wonderful. We can kind of take a deep breath and say, all right, we know what we're going to do. On a side note, what I wanted to add in was the 10-year yields. What happened with the 10-year yields? And that was the secret. That was the secret on looking for where is smart money going. Because when money was being transferred, when we were selling off last week and heavily, I didn't notice money leaving the market. I noticed it going somewhere else. And this is where it went. As you might have heard, and I called it. I had a feeling old man Warren, he's no dummy. He's no dummy, especially in a panicked environment. He's the guy that's holding on to the most 10-year treasury notes here, locking in this rate. And what that tells me is if smart money is locking in the rates here, and we know that it's not inflation data that's per se driving the market, we know that it's the labor force and the market is hanging its hat on rate cuts, well, that means these guys know that these rate cuts are coming in. Otherwise, why else are they locking in these rates? At the same time, the 10-year note, mind this, it correlates, not always a one-to-one, but it correlates with the growth sector. If you see a sharp spike in the 10-year, if we start spiking up aggressively, most likely you're going to see some selling in the growth sector. NQ, ES, tech, you're going to see some selling. But in this case, we had a sharp spike down. We tanked basically. And last week, we had a lot of demand for the 10-year bond auction. It actually did very wonderful. Again, that tells me these guys are locking in their rates because they know things are about to get a lot smoother. Well, let's say basically they know we're getting rate cuts. Um, at the same time, the equivalent of this drop that we had in yields was equivalent to about, I read, a 50 to a 60 point basis point rate cut. So that helped us get that alleviation where we saw a 1300 point bounce in NQ and we saw, ES recover its levels from the downside too. What's funny is I was looking at the charts before we even tumbled down on ES to 5120, and I guess I was ignorant, but when we were around 5,500, I was telling myself, no way ES is going to see 5150. 5150 on ES at that time was exactly a 10% correction off of 5721. And I was ignorant enough to say, oh, no way we're going to see it. But here we are. Anything is possible. With that said, that kind of concludes our overview here and what we're looking for into this week. Um, I hope you have a solid trading week ahead, and let's make it a good one.